Warren Buffett once said, if you don't find a way to make money while you sleep, you will work until you die. Work until you die? Well, we're definitely not doing that. And that is why I've created Life of Dividends. Welcome back to Life of Dividends and happy holidays to everyone. I know it has been a while since you've heard my voice, but I am still here and I've just simply been sitting back, listening, observing, collecting data, and doing my research and homework on these high yield income dividend ETFs. And now that we are here, Christmas Eve 2025, and of course the year is coming to a close here pretty soon, I would say within the next week, we just have one simple question, and I'm going to try to keep this as simple as possible, but the simple question is, are they high yield income dividend ETFs, or are they simply siphoning your principal investment? And that's what we're going to look at today, and that's what we're going to study. Let's take a look here. I will go ahead and pull up my, what do we call this? My Excel spreadsheet here. And let's start off with Ulti. Now, last you guys heard from me, I was all in on Ulti, right? Yeah, I had bought 10,000 shares of Ulti. And I was happy and ready and set to just sit back and collect my dividends. However, I want to say within that same week, something happened. Everything just kept going down. And I sold every bit of my Ulti or ULTY, as I wasn't going to allow what I consider, my personal opinion only, this is not financial advice, but I wasn't going to allow this particular fund to just deplete my principal investment. And here's why. Let's take a look at Ulti here. Let's start from today and let's rewind 52 weeks. Okay. Today, 52 weeks ago, which would have been December 24, 2025, Ulti had an opening stock price or opening NAV of $92.20. Today, the close of the market, Ulti's closing is $38.82. Now, of course, keep in mind, this is after their first reverse stock split, which happened on December 1st, 2025. Keep in mind, the price of Ulti before it split, the closing price was $4.03, which means after the stock split took place, the price of Ulti would have been $40.30, I do believe, and hence today's closing price is $38.82. Now, if we take the opening price just 52 weeks ago to today's closing price, you have a negative NAV decrease, or what some would call NAV erosion, of $88.17. I say again, $88.17 per share. All right. Now, also keep in mind, Ulti in the last 52 weeks has paid a tremendous amount of dividends, being $52.89. Now, as you can see here, the $52.89 did not recover the NAV erosion of $88.17. So therefore, you still have a deficit of $35.28. So that would be your net loss per share. Again, negative $35.28. Now, as you can see here, did I read the prospectus? Yes, I did. What is the total number of risk factors to include NAV erosion in ULTY or ULTI? Well, for those who haven't read the prospectus, there are 21 individual separate types of risk factors. Again, to include NAV erosion there. Is ULTY a leveraged stock ETF? No, it is not. Who is it managed by? Who is the funds group managed by? Well, y'all know the name. Okay, everybody here knows the name. But I think just this simple calculation of the data speaks volumes to whether this should or shouldn't be a fund that you invest your capital or principal investments into these funds. You're simply losing money. Okay, and your dividend, while collecting dividends, you're still not making up for the NAV erosion that has taken place in the last 52 weeks. You are still, to include your dividends that have been paid to you now weekly, you are still negative $35.28 per share. Now, for those of you that may have bought ULTI back last year, December 24th, 2024, at $92.20, with this given example, yes, you would be negative $35.28. That would be your net loss. Now, for those of you that have invested in ULTI throughout the year, let's say you got in at $20. Let's say you got in at $10. Let's say you got in at $7. All you've seen is the NAV of this fund decrease. And with that, so has your principal investment. And no, the dividend payout has not recouped the loss of the net asset value of ULTY. So, for me, again, not financial advice, this has never been a fund that I should have invested in. But I was so excited about the dividends they were paying. We weren't, as for me, I wasn't looking at all of the rest of the information. And that's where I guess we kind of did ourselves a disservice. So let's look at a couple of other funds. The new one that came out, ULTI by RexShares. Okay, this fund started off on October 31st, 2025. Its opening price was $28.83. Today it closed at $15.43. That is a NAV loss or NAV erosion of $13.40. The year-to-date dividends that ULTI has paid is only $1.66. So your net loss in ULTI, if you would have began investing in it on October 31st, 2025, your net loss is $11.74. So, again, the dividend payout has not recouped the NAV erosion. So you are not flat and even. And if you take a look at here where it says read the prospectus, no. I didn't need to read the prospectus after looking at the column under NAV growth erosion per share and looking at the net positive or loss year to date per share. There's no need to read the prospectus because we can clearly see what is going on. Again, ULTI, for me, life of dividends, is not performing in the manner of which we would like a ultra high Yield Dividend ETF to perform. And no, it is not something that we could base, having monthly income on, because you're merely just you're merely just losing money here. Okay. Now we'll go to the third example, one that is actually a leveraged fund, TSYY, and that is by Granite Shares or Yield Boost, right? TSYY. That began 52 weeks ago on, actually started 52 weeks ago on December 19, 2024. And it had a 52-week starting price of $24.07. Today's closing price was $6.27. Okay. Giving you a NAV decrease or NAV erosion per share of $17.80. Now, TSYY, however, has paid out in the last 52 weeks $14.13 as dividends. Again, not enough to cover the NAV erosion or give you a net positive. In fact, TSYY has a net loss per share of $3.67. Did we read the prospectus? Yes, we did. And what is the number of risk factors to TSYY written into their prospectus? There are 33 different risk factors to your principal investment written into the prospectus of this fund. Is this a leveraged fund? Yes, it is 2 times leveraged, managed by Granite Shares and Yield Boost, or however it is you want to say that. So this is a simple way of figuring out, now that some time has gone by, being able to figure out with the data that we've got based on the fund's performance, that these are not funds that are yielding anything. In my opinion, because I've invested into these funds are actually siphoning from your principal investment. Nothing about these funds that are here as an example are giving you any high yield anything. So it's a simple calculation of taking the starting price with today's closing price, and that will tell you whether you have a positive or negative net asset value increase or decrease. Then taking that and looking at the total 52-week dividend payout, and has that dividend payout been more than the NAV erosion or less? Well, as we see here in these 3 examples, it's less. Now, what I want to do is show you what it looks like when a fund has positive a positive increase to their NAV, along with paying a wonderful dividend. And here we are. This is what it looks like when you run the numbers and you see a positive growth factor to the NAV along with a great dividend being paid. Now let's look at the first one, Maggie, MAGY, for example. And this spreadsheet's a little different because I've taken the dates from the date of inception. For example, Maggie was April 23rd, 2025. Its inception price was $52.70. Yesterday, because I did this yesterday, yesterday's closing price was $53.64, giving it a positive NAV increase of 94 cents, with it paying $12.11 of dividends in the past 52 weeks, giving you a net positive per share of $13.05 each. This sounds like a fund that is performing very well. Okay, let's go to GOOW. The fund inception date was July 24th, 2025. Its opening price was $52. Yesterday's closing price was $70.40, giving you a positive NAV increase of $18.40 per share, along with a dividend payout of $13.02 per share since its inception, for a total net positive per share of $31.42. Same with HOOW. Its inception date, June 18, 2025. It opened at $50.62. Yesterday's closing price was $53.02, giving you a NAV growth of $2.36 a share, and a dividend payout since its inception of $30.88, giving you a total net positive of $33.24. Let's check out NVII. Its inception date, May 28, 2025. Opened at $25.09 a share. Yesterday it closed at $28.36 a share, giving you a NAV increase of $3.27 per share, along with a dividend payout of $7.62 a share, giving you a net positive per share of $10.89. TSII. Inception date was June 4th, 2025. Opening price, $25. Yesterday's close was $28.57, giving you a positive increase to the NAV of $3.57, paying you a dividend of $7.44, giving you a net positive per share of $11.01. Let's see. Let's look at the fund that I turned to most recently, AGNC. This inception, actually I think I did this one as the 52 weeks because this has been out a while, and that would be a lot of data to compile. But 52 weeks ago, AGNC was $9.43 per share when it opened. Yesterday it closed at $10.76 a share, giving you a positive increase to the NAV of $1.33 a share. It has also paid $1.44 a share in the last 52 weeks, giving you a net positive of $2.77. Yes. Let's look at last but not least. Let's look at JEPQ, or JEPQ. Inception date, or 52 weeks ago, would have actually been December 26, 2024. On this date, it opened at $58.09 per share. Yesterday, it closed at $59.15 a share, giving you an increase to the NAV of $1.06 per share. And JEPQ has paid $6 in dividends in the last 52 weeks, giving you a net positive to JEPQ of $7.06 a share. You see how there's nothing negative going on with these funds. Overall, through 52 weeks of a performance cycle. Now, I'm sure they've gone up and down and they've fluctuated over time, but if you look at the end results of 1 year being 52 weeks, these types of funds are performing well. Some of them are high yield income dividend ETFs, and the others are, I think, just regular dividend ETFs, but they're all performing lovely. In my opinion, this is what you want to invest your money in. This is what you're paying for. a positive performance, not a negative one. So again, using just the simple math, coming up with a way to just simply, at a glance, look and see how are these funds performing, and do I trust them with my capital, my principal investment that I've worked hard to obtain, and are they going to perform for me? It's a simple calculation, and I just wanted to share that with everyone today so that we can shake off 2025 and get ready for 2026. So I thought I'd put this video together showing you guys what the difference looks like and how it impacts you, and answer the question, and that being, are they high yield income dividends, or are they siphoning your principal investment? Not financial advisement or not financial advice, just simply collecting data and looking at the overall performance. I'm not giving you any direction on what to invest in and what not to invest in. I'm just sharing with you what I'm doing to calculate, is this fund performing, or is this fund just taking my money? And that's what I want to leave you with on this episode of Life of Dividends. This is how we're moving forward. And if a fund can't show us that it's performing in a positive manner over time, for me, it's not the fund for me. So with that, I will bid everyone again a happy holiday and happy new year. And let's go into the new year ready to do something different with our portfolios other than deal with funds that are simply siphoning your principal investment. Everyone have a happy holiday. Thanks for watching Life of Dividends.